Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw a strong liquidation move below the recent low, and ES tagged 1829 quarter in the overnight session. Heading into the open, we have resistance at 45 to 47, and that area can be used to establish short-term directional bias as long as ES is holding below 45 to 47, and we're not seeing any kind of sustained breakout above that area. The sell side can remain in control. On the downside, we have pre-market support 34.75 to 36 and initial support at 29 quarter to 31 quarter. Now, responsive buyers can be active at those support zones, but we have to understand that right now the sell side is in firm control and the directional bias is bearish across multiple time frames. So if we continue to head lower and we continue to balance at those lower prices, there is potential for a continuation move below 29 quarter, which would bring the 12 to 15 zone into play. And that's another spot where responsive buyers can be active on first test. That zone encapsulates the lows from August 2015. So a pretty decent and larger time frame swing low is within that 12 to 15 zone. And for that reason, responsive buyers can be active on first test of that area. On the upside, we would have to see a breakout type move above 45 to 47 in order to pull back a bit from the short side or to be a little more cautious on the short side. So the 51 to 53 zone, which is right above initial resistance, would really only make sense on the short side if we were just not seeing any upside momentum. So if the tick is holding below zero, the AD is bound to be pretty negative. So it's not going to provide as big of an edge this morning, but the NYSE tick can continue to provide pretty decent edge because if we are going to reject these lower prices and head back up into the prior balance, then we should be seeing some decent upside momentum. And that would be the only scenario where it would make sense to be a little bit more aware of trade location when initiating a short setup. So 51 to 53 calls for some caution in the event that we're going up on strong momentum and we're getting a balanced breakout from the overnight balance that developed between initial support and initial resistance. Beyond that, we have yesterday's low, 56 quarter, resistance 59.5 to 61.5, 64, and finally 69.72 is a good spot to look for short sellers first time up. So 59.5 to 61.5, decent location. 69.72 is high probability for a reaction. We have a pretty decent high volume node at 72, which can attract responsive sellers because right now, like I said, the bias is bearish across multiple time frames. So even if we're going to reverse, unless we're doing it on extremely strong momentum, we can still get responsive sellers along the way. But 69 to 72 is conservative location for sellers to step in. Beyond that, we have the previous VPOC and gap fill, overnight high 78.50, and then 80 quarter to 82 quarter again is a decent resistance spot for sell side to step in, and beyond that 93 to 95.50. So right now we're not really concerned with those upper resistance zones at 80 quarter and beyond. Right now we really have to deal with the market at 45 to 47. 51, 53, those are really the two zones that are going to help establish the intraday bias. And like I said, as long as ES is failing and holding below 45, 47, or even if it tags 51, 53, but it does so on very light momentum and then turns around, the bias would remain bearish. And there would still be potential to break the 29 quarter, 31 quarter zone. That's something we'll have to gauge in real time. On the downside now, we also have to keep in mind that when the market gets to 12 to 15 or even beyond, we are testing larger time frame support there. The market is already oversold and will again be testing larger time frame support. So as we head lower, especially below the 12 to 15, for example, in the event of an extreme move, a move down to the 92.5 to 95, right? 1792.5 to 95. That's a larger time frame support area. And then we have, some very strong support coming at 76 quarters, 79.75, and a major swing low at 74, which I believe is from October 2014. So right now we're testing some very larger time frame areas of support that haven't been tested in quite some time, and that's the reason we can expect and anticipate responsive buyers to step in. And again, the market is deeply oversold, and by the time it gets down there, it will be quite oversold again. So you can anticipate a bounce off of those support zones below, and by that point in time, the reward to risk really moves away from the sell side and starts supporting the buy side. So again, heading into the open, 45, 47, 51, 53, really going to help set the tone for the day. And if we start getting a reversal back up, then we could go back up to 69 to 72 and possibly 80 quarter to 82 quarter. So those are the main ideas heading into the open. Let's keep an eye on the 45 to 47, see how the market reacts there, and we'll take it from there.